Hey there, welcome back. If you've been following the news or just tracking gold prices, you've probably heard this hot topic. Is the RBI's big gold move behind the recent slide in gold prices? Let's break it down and get to the real story. First, the facts. In June 2025, the Reserve Bank of India brought back a whopping 100.32 metric tons of gold from overseas vaults to India during FY 24-25. With that, domestic gold holdings jumped to 200.06 tons, while the RBI's overseas gold reserves dropped from 413.79 to 367.60 tons. But wait, total gold reserves actually grew from 822.10 to 879.58 tons. That's thanks to a combo of higher gold prices, rupee depreciation, and the addition of 54.13 tons to reserves. So why does any of this matter? Well, having more gold stored in India gives the RBI real flexibility. It can step in and release gold into the local market if needed, which could help in times of crisis or volatility. But even more importantly, it's all about smart reserve management. Balancing gold between vaults in India and overseas means the RBI can manage liquidity, reduce the risk from global politics, and make the most out of its reserves. Bottom line, this move is about control and safety, not about making a quick buck or crashing the market. Now, the big question: did the RBI's gold repatriation actually cause gold prices to fall? Honestly, no. It's a classic case of correlation versus causation. Central banks, including the RBI, usually don't sell gold right after bringing it home. That gold is a reserve asset, a safety cushion, not something you just throw into the market. And so far, there's been zero indication that the RBI is planning to sell its gold stash. So what's really driving gold prices down? It's mostly global forces. For starters, the US dollar has gotten stronger lately, and global interest rates are up. When that happens, gold tends to lose a bit of its shine as an investment. Add in easing geopolitical tensions and less safe haven demand, and prices take a hit. There's also a local twist. In India, the rupee has been stronger, making gold cheaper for Indian buyers. That's pushed prices lower on the home front as well. Remember, moving gold home is not the same as selling it. The RBI is just shuffling its assets for strategic reasons, not dumping gold onto the market. But what about the future? Could gold fall even more? Well, a lot depends on what happens globally. If the US Federal Reserve keeps rates high or the dollar stays strong, gold could see more pressure. If inflation stays low and international tensions don't flare up, there might not be much reason for people to rush into gold. On the other hand, if the rupee weakens, gold could get more expensive here in India. The RBI might use its gold for lending, swaps, or other financial maneuvers, but there's no sign they're planning a big sell-off. So here's the key takeaway. RBI's gold repatriation in FY25 is about strengthening its own position, not about selling or manipulating prices. The recent price drop? That's global finance at work. Stronger dollars, higher interest rates, and less demand for safety. Gold could dip more, or it could bounce back if things change globally. But it's the big macro trends that matter, not just what's sitting in the RBI's vault. If this helped clear things up, hit like, subscribe, and tap the bell so you don't miss future deep dives on gold, markets, and more. Got questions? Or want another finance topic explained? Drop it in the comments. I always read them. Thanks for hanging out. Until next time, keep your investments smart and your curiosity sharper. Cheers!